Hello, Accounting 203 students. This is Professor Hassey. It's Tuesday, July 2nd, 4th of July weekend. But before we start the weekend, we have an accounting class this weekend. And I'm sure quiz number 2 is driving some of you totally bonkers. But no worries, we're going to be reviewing that this evening. I know about half of our students still need to post their quiz number 2 work. And we'll see how those postings go today and how much quiz number 2 I can cover this evening for all fairness of the students who have already posted, but we'll see about that. But we will be completing the accounting cycle this evening, going over it again one more time. Remember, next week we have our midterm examination, but before that we're going to also study retail accounting, chapters 5 and 6, this week and next. And I have a brief video explaining retail accounting for you in just a minute. Also, another thing we're going to be doing and discussing this evening is your project paper for this class. You have no graded work this next week, but you will be putting together and determining your company to choose for your paper. And I'll talk all about that this evening in class. You will be doing a paper on a company's 10K financial statements. A 10K is the government report that all corporations need to file for their financials. And so we'll be learning and talking about that and doing a paper on that in this course. So we'll talk about that this evening. First off on our agenda, let's make sure we know what retail accounting is to get ready for those studies in chapters 5 and 6.
Hi, I'm Paul Kimmel. In this chapter, we're going to talk about financial reporting issues for merchandisers. You often hear business people talk about the need to focus on the bottom line. In accounting, the bottom line is net income. To increase net income, you need to understand the components of net income. That is, what are all of the activities that result in the bottom line? Identifying the components allows you to identify the areas where you are already doing well and areas where you can improve. Merchandisers like Amazon, Best Buy, and Target prepare income statements in a way that enables them to evaluate their main activities. They start with gross profit. Gross profit is the difference between sales revenue and cost of goods sold. That is, it's the difference between what you pay your suppliers and the price that you're able to sell the goods to your customers for. Sometimes merchandisers must cut their selling price in order to sell their goods. This drives down their gross profit. When gross profit declines, companies must take steps such as reducing their operating costs in order to maintain their profitability. Once you are familiar with the income statement presented in this chapter, those steps will become far more intuitive. If you want to focus on net income, you need to focus on the components of net income. This chapter will show you how.
So there's our introduction to Chapter 5, Retail Accounting. Looking at things a little bit differently with the concept of gross profit and cost of goods sold, a little bit different than just expenses that we've seen in the first 4 chapters. But before we get to that point, we want to make sure we're all familiar with the accounting cycle, chapters 1 through 4, and we'll be working on that exclusively this evening and then talking about chapter 5 and 6 next week. I just noticed my hair. It looks atrocious this morning. It looks like I just got out of bed. Good Lord. All right, everybody. We'll see you this evening. For those who still are working on their quiz number 2, please feel free, or please post if you can by the class time this evening. If not, that's all right. We'll just work with you on getting that updated and posted. Have a good day. We'll see you this evening. Bye-bye.